we go. We're live now. Tevis, how are you today?
Are we live? Hold on. My internet
live,
is so
yeah.
bad. Okay, it's slowly coming back. I'm doing well. How are you?
Doing well. Another great week to end the year, actually, for us. We probably won't have a stream next week, so a lot to cover this week. As always, guys, if you are here with us towards the end, we'll try to get to the rapid fire question and answer time period. There will be a lot of not sure, I don't know, I don't follow that stock. And this is not financial advice. But tonight we're going to look at continued narratives as it relates to the AI trade, specifically some Meta news, some NVIDIA news, a little bit of Tesla news there as well. Silver is one of those topics that we're going to talk about, some predictions for the market, and a few other topics as well. Where do you want to start, Tevis?
I lowered my video quality, so hopefully I will be here and you guys can see me in near real time and not potato quality. We can start wherever you want. Happy New Year, everybody. This is going to be the last bootleg weekly of 2025. And it's going to be a fun one. We're going to talk about a whole bunch of stuff. We can start wherever you want, Roy. And
Okay.
But one request is that you're going to have to drive the most of this. That's why I sent you the links, because my internet is god awful. I was just telling Roy before we hopped on, they're popping off fireworks here because of the new year, and they're a day early, but they just they're trigger happy people. So if you hear anything in the background, that's why. It's because it's midnight here, so the 31st just came in.
Okay, yeah. So let me then throw this up here. So let's start off with this. Continued. There we go. Streamyard is being a little bit laggy. This is news that occurred just a little bit earlier in the week. Meta just bought Manus for less than, or a little over $1 billion. It makes sense. And so this is just listing out the apps that have come out of that. Meta, it's one of those Mag 7 plays that have lagged a little bit and it's lost some of its luster. But is this one that you're getting into, Tevis, or are you looking into getting into Meta at some point?
I'm into Meta currently. I am, I think like 7% of my portfolio is in Meta right now. I want to bring that up to 15%. So very bullish on this news, and we're going to talk about it. But yeah, I'm in Meta right now. I want to get in heavier because I think it's going to be a big winner in 26.
Yeah, it's one that if I didn't hate what the company did or have concerns with it, then I would be more interested in getting into it. But it's attractive as far as valuation, the opportunity there. So and next year I think will be pretty good for the Mag 7. And it's been, I think every single week there's been some pretty significant news as it relates to the AI trade and CapEx and AI spend. And one of those that stood out to me was this one that you also shared with Anthropic as it relates to Broadcom as well. So of course, the classic Mag 7, Broadcom's not in there. The Batman, if you prefer that one, Mag 7, or it gets in there instead of the Mag 7. But Anthropic spin, this is the original chart that was here with Broadcom. This was an analyst note that came out basically expecting significant upside. And a lot of it goes, you can see the expected expenditures from each of these, and then in 2027 as well. And it's interesting just to see that some of them, like Anthropic, just because of the strategy that they're pursuing, has a glut of spending in 26 and not so much in 2027. But yeah, as an NVIDIA shareholder, whenever I read like things relating to TPUs or the tensors, I'm like, okay, enough of this. Get back to NVIDIA, please. So
yeah, let me. So we can talk about Anthropic. I think my first thoughts there is that it's going to be wildly overvalued in 26, given the hype that it has, and given the fact that it's still very much in investment mode, let's say, to grow faster. So buyer beware on that one. I would say I want to share with you my NVIDIA trade, because that also happened this week, and I posted about it, and we can get to that eventually. Just going back to the Meta Manus thing, did you have any thoughts about the acquisition specifically, just before we move on?
Not beyond like just the environment that we're in. That just a couple of years ago, that would probably fall under a lot more regulatory scrutiny. And
Yeah.
as we see an environment that's a little bit healthier, so that a lot of these more that are, this is, I guess, a little bit more than a startup, but startups that are just like trading at a very depressed valuation, they probably are not going to be keen to necessarily be acquired versus like the environment we're in now. I think I'm actually really curious to see if we see a flurry of this next year, especially before midterms are finalized, as they try to take advantage of this regulatory window.
Yeah, let me provide a little bit of context. Yeah. This is a startup that's been around for 3 years, but their agent only launched in March. So they didn't have a product for the first little while they were building it out, and their product is about 8 months old. Now, in those 8 months, they've got to $125 million run rate, and that's still growing. So the product is growing like wildfire. And one of the things that differentiates it is that it's an agentic AI platform. So it does actions on your behalf. Meta has, because I did a video about this earlier today, and Meta has a quite successful acquisition history. I mean, they bought Oculus for 2 billion, they bought WhatsApp for 19 billion, and the most famous one is Instagram for 1 billion. And then there's smaller acquisitions all throughout. So the reason why I'm bullish on this and why I think it could be really good is because I view it as an asymmetric bet that they're making. Worst case scenario, they get 100 or so talented AI engineers based out of Singapore, and they're increasing hiring in Singapore as well. So they're going to have a increasing presence there. Best case scenario is they actually pick a winner in the direction that this AI trade is going, in that arguing that this agentic platform embedded into their consumer apps is going to be how they win. And I saw this as really bullish for like WhatsApp for Business, for example. If I all of a sudden in WhatsApp for Business have these agents where they act as like little sales reps or lead generation or whatnot for my business, that is something I would be willing to pay extra for, right? Or in their SMB segment of their business. I mean, yeah, it still works for like the core, Facebook and Instagram, but it's more applicable on like the B2B side of the trade. But Meta's ecosystem is so vast that if they actually pick the correct winner and saying, screw the LLMs are going to be commoditized, but this agentic platform, this orchestration layer is actually where the main trade is going to be. I think that is really interesting to have paid only $2 billion for, because $2 billion is chump change right now for every trade that we're seeing with AI. And there's a bunch that we're going to talk about, the Intel thing, the NVIDIA thing. So I view it as a massive asymmetric reward to risk ratio for Zuck.
Yeah, I think put that way, especially with the talent that they acquired, and we've seen the extreme premium sometimes attached to that kind of talent. This seems like it's a steal for Zuck. So, and like you said, strong history of acquisitions and making that accretive to the overall business. So we'll see that again here. Very limited downside too with what they've managed to pull off. And with that's one of those areas where honestly Meta has underachieved. Of course, Zuck went after talent from several of the other competitors to try to improve Llama 3. And if you look at its share and how it's comparing to all the other models, it's really far behind. And there's been some internal memos have been leaked as well, where Zuck has been quite displeased with the measured success. And that kind of brings us to that next topic on generative AI and traffic share. Let me throw this up. This is from Rihard Jark.
Good resource.
Yeah. Okay, good. Yeah. So yeah, this is showing the shift from 12 months ago, when OpenAI was just dominated. And the biggest change here, of course, is OpenAI being smaller, but Gemini's market share has climbed immensely, and some have made a little bit of gains and stuff, but that's been the biggest change. So what do you make out of this, Tevis? And does this have any ramifications for stocks that we follow?
I mean, I think this is the same narrative that we've been tracking for the majority of this year. This thesis that we had way back when as a debate, maybe in early 25 or late 24, where we were saying, I think it was me and you that was saying that LLMs are going to become commoditized. And then Tanner was saying that OpenAI has such a uh, insurmountable first mover advantage. And as a result, is going to emerge as a winner. And largely what we're seeing is we're seeing all of these other players eat into the OpenAI market share. And I think we're going to continue to see that trend in 2026, where that blue bar that's OpenAI, which is the lowest today in terms of total market share than it was in the last year or 2 years, is going to continue to fall as a result for two reasons. Number one, there's more entrants into the market. Like Manus, for example, is only around for 8 months. Like that didn't even exist a year ago. And then the second one is that the existing players have new methodologies around how they're like what's the underlying like formulas for their models. Like I don't know if I saved this or not in our list, but Google released the paper where they were basically doing it fundamentally different than how others were doing it in terms of how they were coming up to the. I'm not sure. I think I lost Roy.
I'm still here.
You guys either lost me or I lost Roy.
I can still hear you. You're good.
but essentially Google was doing it fundamentally different than other models. And so by having that variance, not all the models under the hood look exactly the same, then you're going to have a more dynamic environment where it's going to work towards a perfect competition and or commoditization.
Yeah, that's what we've seen. It actually, I think it's a healthy thing too. You don't really want to see another Google type of dominance as it relates to the LLMs. Um, it's worked out okay, but I think that the market, even or the internet itself, would be very different today, probably in a healthier space if there was a healthy competitor out there. Never happened. So a little bit more diversification and specialization too. Like Anthropic and Claude are all over on the coding standpoint, and engineers being used by businesses versus like regular folks that are not coding. They're like, oh, there's nothing exciting about Claude. It's because that's really not the market for it. So.
Yeah, and I don't think it's going to get to that point where like that concentration that OpenAI had of having like 90% plus of the market share. I think it's going to be a long, 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 long time before we get to another person having 90% market share. Just because the barriers to entry are so low and non-existent, quite frankly, for these LLMs that if Grok comes out with a new model, I'm like, yeah, screw it, I'll try it. I'll throw $20 a month and try the new model. And if it unlocks some type of efficiency gains versus what I'm currently using, then I'm going to use that instead. And so this idea of the ordinary consumer now being so much more open to experimentation through different models is going to naturally lend way to a perfect competition across these models. I love the fact that OpenAI is sweating. I love the fact that they did a code red because that, as a consumer, for me, makes it so that I get more stuff either cheaper or faster or both.
Yeah, it's definitely good for us, and that's the importance, I think, which usually regulators are there to make sure that it's enforced, that there is health for the consumer. But yeah, right now things are moving in a healthy direction on their own, and so that's a good thing. One item also that you shared, also from big tech, although from Satya over on Microsoft, was looking ahead at the pivotal year for AI, and there's a couple of points in his letter that he sent out, which this is going to be way too small for anybody to see. But the concept of bicycles for the minds, evolving from models to systems when it comes to deploying AI for real world impact. And then I forgot what the last one was. Real world impact evaluation. So, what stood out to you, Tevis? And is there anything as far as implications to stocks in your portfolio from this?
Look, I think that the overwhelming consensus in the market is that the rally will continue into 26. That's not necessarily saying much about AI trade specifically or what the narrative is going to be there. It's largely going to be around spend versus will this manifest into ARR and to what degree, and to what degree will we capture market share. But largely speaking, most banks and analysts have this in 26 going up and to the right for the index in general. I don't know. I mean, I think that we've had a couple of good years, really good years in the market. Can it continue? Sure can. Will it be on the back of AI similarly as 25? Potentially, but I think it's going to be more nuanced in terms of people are more aware of all the inputs and outputs of what the total addressable market is, of what the cost is, of what the bottlenecks are with regards to energy concerns and data center build out and all this stuff. And so I think it's going to be more nuanced in terms of the AI trade specifically, because you're not going to get like an Oracle or a Micron or something completely shocking you and moving up 40%. Like, I don't think you're going to get that in 26. You still will get shocks, but I think the market is more like, they're up on their game right now in 26. Maybe I'm giving them too much credit.
No, I think it's fair. I think that they've warranted it so far, and we'll have to see how they continue to perform. And you mentioned Micron there, right? So I was looking at for a separate video that I'm working on that'll release in the next day or two on Palantir, but on top 10 performers of the S&P 500. And so Micron is one of those, and obviously Palantir, because I said it, is another. Can you name any other top 10 performers in the S&P 500?
In what year? 25?
This year, yeah.
Robinhood?
Robinhood, yes. Robinhood's up there, 210% year to date.
HIMS?
Not HIMS, not in the S&P 500 yet.
Oh, I guess. Hold on. Google is up like 60% or so.
Yeah, no, it's the top 10 rounds out at 124%.
Oh, okay, hold on. Oklo?
Oklo's a good guess. I don't believe that they're in the S&P 500 pre-revenue, so yeah, Micron we already established.
Yeah,
that one was like, oh man, they really outperformed. So I'll throw
the list. Let's see.
Yeah, I'll throw this up. And number 11 is one that you would for sure be familiar with too. But yeah, so the list is dominated with AI trade names that kind of caught up. So, last year at this time, nobody was really thinking about the demand and the impact as it relates from storage devices, flash memory, and hard drives itself. So that's SanDisk, Western Digital, and Seagate. They're mostly in that industry and space. And also with RAM. RAM is more of a triopoly that's out there. Micron is publicly traded and available. And it's, they understood that there was some demand as a result from the AI trade, but the way that the chipsets changed in the demand for the HBM, I believe is the acronym, it in the DRAM as well, it dramatically increased the demand on validated stacks of RAM, and Micron was right there to supply. And it seems like that they may have a little bit of an edge in their product too. So like this whole AI trade is like, okay, number 1, number 2, number 3, number 4, and well, not number 5, but yeah, Palantir, number 9, AI trade, Robinhood, of course, doing well. And number 11, App 11.
Warner Bros is only there because of the acquisition. Like it has no business being up there.
Yeah, that's true. That's fair. Yeah, and that'll happen.
Crazy. Carvana's always
Carvana, ridiculous. And yeah, like what's really impressive.
Yeah, crazy.
For the Palantir video, like this is a second year. I believe last year Palantir was either number 1 or number 2 to App 11. And it had just joined the S&P 500. Of course, this year, you don't expect, back-to-back top 10. That's rare. Robinhood, perfectly capable of that too. Apple, but like a year forward, like which of these is the most likely to actually hit? Probably none of them. I do think, Tevis, there's a name that we both own that is not currently top 10 in the S&P 500. That
are they currently in the
S&P for next year?
Are they currently in the S&P 500?
Now, if I answer that question, it's going to answer my question.
Is it Nebius?
Oh,
well, I guess we both own it. So No, it's not Nebius. Hold on. That we both own that could be in here next year, SoFi?
SoFi, exactly.
Yeah.
Yeah, I think it's extremely likely SoFi joins the S&P 500, which with a stock held as heavily as retail does with SoFi, tends to help the price performance a decent bit. But there's a lot of other catalysts as we talked about, and so they may not be in the S&P 500 the full year. It still counts whatever year to date is. Don't be surprised if we see them top 10 next year.
Yeah, I mean, what did SoFi do this year? It's like 80% or something, 90%. Hold on, let me check real quick. Yeah, 87, 88% is what SoFi did this year. So they wouldn't have broken through that list, but even if they were in the S&P 500, but they would have been in the top 15. That's for sure.
Yeah.
It's crazy, man. Like if they do 88% and then next year they do, a double, that would be, I'd be very happy with that. I would be, I'd be very happy
Yeah.
with that.
When you have back-to-back years like that and the compounding gains too, it's just like, oh man, this is filthy. So
Yeah.
feels like a cheat code, the opposite of holding PayPal. But yeah.
The opposite of, well, I got a question actually about PayPal, but we'll do all the questions at the end, and then we're gonna cover it because I got PayPal questions, I got BMR questions, and I sure have thoughts on BMR. So we'll cover both those at the end.
All right.
It's our last stream of the year, Roy. We have to make it a little bit longer for the people.
Or shorter.
Or yeah, sure. I mean, depends on what year it's
quantity is not always quality. So yeah, US economy explained here, and just the cyclical nature. And honestly, like when we had this discussion with Tanner, this is an economy. It's a microeconomy, but it is an economy. It's how things work. If you don't have an exchange of goods or services, you have stagnation. You have nothing that's happening. It's really the velocity here that matters more than anything. I'm not saying that this is like wholly healthy or anything like that, but yeah.
Yeah, ad spend tanks in January and February. We're going to go from making $2 to $1 on the show.
I don't know. It's a midterm year. So,
I mean, look, man, this is how you create $30 billion out of nothing, out of just thin air. That is kind of scary to me, isn't it?
Yeah. Yeah. I mean, like, it's not like really, really concerning, but it is one of those things where you're like, okay, that's not great. So it's like if you're looking and you're shopping to get a house, it'd be one of those things you notice like, I don't like that. We need to remember to work on that. It's not a deal breaker. And that's at least the way I see this right here.
Yeah. It's like, I don't love it because of the domino effect. If one of these names has some type of counterparty risk or goes under, or I mean, goes under is kind of like an extreme example, but has something significantly changed with regards to their prospects or the guidance or the forecasts, then it's going to drag down the rest of the names. And I'm not saying that's not happening currently. It is, but this just actually gives it a reason to be happening.
Yeah, of those, like the only one that I would see a significant risk of that is just OpenAI, just because of how new that revenue is. You don't really know how durable that mode is. You've seen the product give way some to Gemini. And so if that spoke breaks in this ecosystem, how fatal is that? I don't think it's fatal, but it's not good.
Mm-hmm.
The other, like, I mean, 5 billion for Google is nothing. Microsoft, nothing. Meta, Apple, Amazon. I mean, like NVIDIA, that they find $5 billion in their couch, like spare change.
Yeah. Why Intel though?
I mean, that's kind of what they're doing is they're creating a mini ETF of AI hardware related names. And while I don't particularly love that, I mean, they do stand to benefit from there being multiple different foundries. So this might be a way of like subsidizing that, but just diversifying their assets. And like Sigeg said there, with Intel, just the way it's propped up by the U.S. government right now, they're horribly inept, and they have been for a long time. And I have no idea if the new CEO will be great or not. Who knows? But yeah, they're too big to fail. So
Yeah, I mean, either way, I am cautious about it, but this didn't make waves nearly in the same way that the previous deals made waves. I remember when the first ones of these deals were announced, we got big moves up and down, whereas now it's super ordinary.
yeah, it seems like almost weekly. So I think he might have frozen up at the end. So if not, we had an awkward pause, and I'm like, I don't know if he's still talking or if he's frozen.
Yeah. It's funny because like Streamyard, because it's streaming, like the camera feed is coming from my like local camera, and so I see myself in perfect 1080p, and I've seen the streams like as the audience sometimes use them, and it's just like potato quality whenever I'm traveling. So hopefully you guys won't have to suffer for much longer because I think by next week I might be home for bootleg. So there you go.
And I will be traveling. So, but the week after, I guess.
Yeah, Roy, it's this Texas internet.
I mean, I don't know. We were approached by another internet service provider, like, hey, try us out side by side for a month, and they're actually worse. So I don't know.
All right, what is this? Oh,
This is David Sachs replying to Ron DeSantis on the billionaire tax. There's been a couple of billionaires that are publicly, and I'm sure if there's several that are public, there's a whole lot that are privately saying this as well. That say if this hits, then they will leave the state. So this noted Peter Thiel and Larry Page might be part of that flight.
Yeah, it's just like California, I think, is doing everything they possibly can to bankrupt themselves as fast as possible. Because I don't know why. Like, what is that? I always forget the name of this thing. What is that chart where it shows the more you tax, like there's an equilibrium, and the more you tax someone, the actual less revenue you end up having? I always forget it.
Somebody under Reagan, but I don't remember. Yeah.
It's named after the guy. Anyways, but that's like I think California is at the far end of that scale, and going even further down, that you can't just. And this is my problem with taxation, is like it's fine in principle, but right now there's serious concerns around how those funds are allocated. Number one, which loses public trust in the system, and then number two, it's like, well, yeah, the Laffer curve.
Yes, I knew we had a smart audience. Good job, guys.
Yeah. So based on that, I just think that like people are going to vote with their wallets in terms of where they end up going. And that's what companies have done for years by offshoring and domiciling in other jurisdictions like Ireland or Cayman or whatever have you, because because the loopholes exist. Individuals have been doing it through corporations and holding companies and whatnot. And it's very easy for somebody like Peter Thiel or somebody like, David Sachs or whomever to just be like, oh, really? Like billionaires? Like that's when you like the people with the most resources at their disposal to avoid taxes. Those are the ones you want to start taxing. Well, great. All of them are going to leave, and guess what? They're going to take their companies with them. They're going to file for paperwork in Texas. The what do you call it? Incorporation in Texas, and tough luck. Sorry for all those local jobs. San Francisco is no longer going to be the home of all of this innovation. I mean, it still is for a while, but like if you go down this path, it leads to inevitable destruction, I think, because you have to align your incentives as a government with the individual's incentives, and they're inherently disaligned, but you have to do your best to try to align them as much as possible if you're going to make progress. And if not, then you're going to get screwed.
Yeah. The other thing that was noteworthy of this was that this was a tax on unrealized gains. So it was specific to egregious, in their minds, value given to CEOs and C suite people of companies that have realized massive gains because of their portfolio. And instead of selling that, causing a tax event, they just hold on to it, borrow against it, and never really have to pay taxes. Loophole on that side for sure. Maybe there's something that could be done on that end. But basically, this is okay, we're going to create a tax event. Now, if all of a sudden it's a 5% across the board hit, most billionaires are not like sitting on just that much cash or cash equivalent. They have to sell something. So then they sell stock, which if they're selling their stock, what does that do to the share price?
Yeah,
It's not positive. If you do that across the board, man, it causes a lot of ripple effects. Plus, there is a possibility of contagion of a different sort that if this begins to be a thing and it goes nationwide at some point, that is going to be very, very detrimental to the markets.
Yeah, it's silly. I mean, I think everybody knows that in reality, it's not gonna come to fruition, and so it's almost like sort of FUD and rage baiting at this point. But just like taxing unrealized gains is ridiculous to me. And this thing that Sachs, where was it? Hold on, let me throw this back up. Yeah, so not this Ron DeSantis post. There was another one with what's his name, Ro Khanna, and he was basically saying that like they want to. If you hold on, let me see if I can pull that up actually, right? But it's just like it illustrates how crazy this is because he was saying he got into a fuss with David Sachs and JKL, and JKL was like, "Hey, like, how much his wife was wealthy or something," and he's like, "How much money does she have? Do you agree with the state taking 5% of all her wealth?" He's like, well, it's not my money, so I don't think it should be taken. And you're like, this is the hypocrisy. Like, how do you feel if it's like if you put a name to it, it's kind of different. Let me see if I can throw that up. But I mean, look, I don't think it's going to happen. Quite frankly, I think they've been talking about this for a while, and I think they take advantage of the fact that everyday people that are not in finance, YouTube, finance X, whatever, like they don't understand the discrepancy between billionaires' wealth being predominantly in stock versus like, oh, like Elon Musk doesn't have $400 billion in his bank account just sitting in his checking account. Like people know that, right? But some people won't know that, right?
They don't. Yeah, most people don't.
Yeah, so that's I think the distinction.
Yeah.
Yeah, I don't see
another political one. Man, you were all over the politics this week. So calling out Bernie Sanders.
Oh my God, that guy, like, I know like it's kind of unpopular for me to just have political takes, but like, man, oh man, the guy, he's like probably the most successful person on X to rage bait me. and I apologize to like we're gonna get off the politics topics, but geez, it's just crazy, man. Like, yeah, go ahead.
I've entitled this segment "Tevis hates on Bernie Sanders." Just FYI.
Well, yeah, I like so maybe I can throw the post up. Fine. Yeah, he was like, click on the actual post.
Okay.
He was like, why would corporations like Amazon replace workers with robots? Pretty simple. Robots don't need a wage, healthcare, time off, sick leave, social security, Medicare, unemployment. Maybe it's time to tax robots and use the revenue generated to help working families. Okay. I said, what did I say? Oh God, this is me waking up in the morning. Like, fuck this guy. 5:41 a.m.
Tim was also going off on him too in the reply. I like Tim's reply.
I said, this guy's insufferable. I said, robotics is an example of technological progress that drives societal efficiency gains. Let me just tax my espresso machine in the morning for making my coffee too. That'll surely solve the inflation caused by rampant and unchecked government spending. So I basically, I agree with the problem. Like people are going to be out of jobs when you mix AI and robotics. Wholeheartedly agree. I don't have any issues with that per take. I agree that people should be talking about the problem,
Yes.
right? I think there should be discussions around it. What I disagree with is I disagree with people jumping into solutioning when the problem is complex. And the reason why Bernie is so successful at rage baiting me is because he's a one trick pony that his answer to everything is more taxation, more regulation. And to the degree to which it would actually help these families in need would be absolutely fine with me. I mean, taking money out of Amazon's pocket does not really, make any difference to me, even though I'm a shareholder. But I call BS on the fact that it would even go to those working families because you're seeing the level of corruption, the level of fraud. I mean, we just saw this like Somali daycare story be all over X. Elon posted earlier this week around it saying he estimated from his time at Doge that about 20% of all the federal spending was fraud. And so I'm like, okay, even if we accept the premise, which is the first order, like me and you to agree on, that this solution proposed by Bernie is the correct solution, which I don't think it is. I think the correct solution is more nuanced than that because the problem is not so black and white. It's like infinite shades of gray. But even if we agree with this, you're asking me to now believe that the extra revenue you generate from taxing all these robots is actually for the first time in the history of the world going to be transferred to the actual people in need without a million middlemen sticking their hands in that pot. That's the piece that I call BS on. It's like, man, we've seen taxation go crazy over the last couple of decades. Taxes have increased quite dramatically. And it's not about robotics. It's not about AI. It's the one trick pony thing. It's like one solution, one size fits all. And the fact of the matter is that life has not become easier. Inflation has increased. Life is more expensive. It's more unsustainable. In Canada alone, taxes account for more than every other bucket of spending, more than rent, more than clothing, more than food, combined. So it's just like, how can you ask me to look around and be observant of the world that I grew up in and where those tax dollars are being allocated? And then you also ask me to sign up for more taxation because this time it's going to be different because, this time it's actually going to be allocated to those end people who are suffering. I call bullshit on that, quite frankly. Like, I don't think it's going to happen because you're thinking I'm stupid by looking around and saying like, oh yeah, don't worry about that. The same thing that caused that is actually going to be the solution for that. That's not going to happen, dude. And so this is why I think Bernie is absolutely insufferable because he doesn't actually take the time to have a discussion to actually find the nuances in middle ground. He villainizes and he points to the billionaires, the people who have created all of these jobs, to also push forward his agenda that he's been pushing forward for like 60 years. And life has gotten no easier as a result. So that's my whole thing about that. Politics done.
All right. Well, we'll leave it there. I can't say I disagree with any of that, but yeah, the reason why we mention politics is usually, as was once said famously, elections have consequences, and oftentimes those are felt in the stock market as well. Usually first, actually. So, depending on if unrealized taxes start to be a thing, huge impact on the stock market, and depending on what happens as it relates to the impact of AI robotics as well in the job market, huge ramifications there as well. So,
yeah, I mean, look, man, like, okay, hold on, I want to bring this comment. Taxes have not increased dramatically. You're talking about Canada, about the stock market, and these people live in America. The actual percentage of people that are invested in the stock market is now at highs, but it's still not nearly as high as it should be. How about, so a couple of other solutions. This is just me spitballing, right? And some of these might be dumb, but like, okay, how about for every one robot I buy from Tesla, the government forces Tesla to allocate, the equivalent dollar amount in Tesla shares to me. Direct, no middleman. And so then if I buy the product of that company, I'm invested in the success of that company inherently that's forced by the government. Or if that robot creates utility, the company that employs that robot reallocates a portion of those funds back to me. And it's a form of UBI through the labor of the actual machine, but it's not a straight up tax. And I think the thing, Kevin, that I disagree with is I disagree with this middleman being the allocator and the referee of how much funds to collect, when to collect those funds, how those funds get distributed. Because historically, they've been proven to be a horrible referee that has no real incentives to actually get those funds to the end consumer because they still want to drive forward their agendas. So I think taxation is fine as long as you align incentives and or you remove the middlemen.
Yeah, fair enough. On overall year-to-date performance, it's a time when a lot of times we look at our portfolio and we look at what performed best over the year. It becomes meaningful about this point as well. So if you pull this up, one of those that is not normally on my radar, I do have a little bit of this. Silver was an extreme outperformer. Gold 70%, S&P 500 up about 17%, and Bitcoin is down and this is actually widened since this was first posted on December 23rd. Any surprises or anything stand out to you on this, Tevis? And is this what we should expect the year forward?
If you told me at the beginning of the year that all the metals would be up near double digits for all of them, like copper, palladium, fucking gold or silver, everything, and Bitcoin would be down year to date, I'd probably bet my life savings that that was not going to happen. So it's very interesting because I keep seeing these posts around like, this has only happened twice in the history of the stock market. This only happened once. And if this indicator flashes, it's like last time this happened was 1929. And I'm like, wow, we have one of these like historic only happened once events like every year, basically, And I was saying this to a family member. I was like, I've in my very short tenure of like in the last 3 years alone, like you've seen oil go to negative, in terms of dollars per barrel. And today we've seen like an ounce of silver be as much as a barrel of oil. Like it's it's absolutely wild to see the fluctuations. And it's so eye-opening because people swear by these like market averages. On average, the S&P returns 9% or 10% or whatever it returns. But what they don't tell you is that the averages are like plus 80, minus 70, plus 10, minus 20, plus 50, minus 40. And it's just like, yeah, it averages out over a long period of time to that very smooth line. But it's just like, hold on for dear life, man, because like it's craziness. So it's always interesting. And that's, I think, what makes it fun for me.
Especially since 2020, the IV and the volatility in the market actually has increased dramatically. So before that time, you could almost say, yeah, but it's close. No, that's not the way the market is operating, at least these days.
Yeah.
What are your expectations for Bitcoin then this next year? And are you looking to buy?
I'm probably not going to buy. Maybe. I mean, depends on what it falls to. I think if it falls to like low prices under 70, maybe I'll buy again. But my cost basis for Bitcoin is significantly lower than that. It's like 12 grand or something. So I'm not going to be buying anymore. I'm also not going to be selling. Like Bitcoin is the one thing I just don't think about at all. Like it can go up, down, or in circles. I just don't think about it.
Yeah, that little meme though, for me, like I plan to do a video and release it while I'm on my trip next week, but just kind of where my portfolio is as far as an update. And the part that I normally don't talk about too much is I have some precious metals, some physical precious metals. I have a chunk that's in just broadband, almost S&P 500. And I also don't really talk about that. I focus on my individual portfolio most of the time. And I've also regarded Bitcoin, at least in my mind, and Ethereum as well, to a lesser extent, as just the same thing as my precious metals. It's like It's not. I can spin it if I need to. I can sell it if I need to, and there's going to be demand for it. But I don't really want to. It's just there for a rainy day.
Yeah, then very similar in that sense. I think it's going to be higher though than this year. Yeah, I don't think it's going to be negative. Like just looking at the charts, I don't like Bitcoin doesn't pull too many negative years in a row. So yeah,
Yeah. It's a
bullish.
little unusual though, the way it's been trading this year. So
Well, it's all these institutions, man. It's all this manipulation that's going on to the price. Like they, I should have saved the chart. I didn't, but it was showing that every pump was essentially sold off on Bitcoin, and so much of it pushes to institutions. And I even covered this in one of the BM&R weekly recaps. I said, oh, and by the way, sorry that I didn't acknowledge this. Thank you, two brothers, for the super chat. Really appreciate that, and I'm glad you're enjoying the BM&R content. I'm enjoying making it. And I was saying in one of them, Roy, that people had found on X that it pointed to Jane Street. And Jane Street was like the main market manipulator because they're allocating to their positions, number one. And number two, wiping out all of the leverage in the market. And so now that you're having institutions playing this game, like it's very much going to be manipulated until they all get in. And then once the incentives are there for them to, make it rise, then they're going to make it rise.
absolutely. I don't know why you sent this one, but it's fun. Maybe the reason is because it's fun. So maybe the reason is people might be looking for yield, especially as rates might be falling this next year. And one of those sources that might yield higher than you might expect is this. Is this free money, Tavis?
Yeah. So you actually sent this one first and foremost.
I did? Okay.
I don't know if it's free money. I just I hope it doesn't happen because like that's going to be like the Arizona iced tea when they finally broke the 99 cents. Yeah.
Yeah.
Costco hot dogs is like, it's like treasury bonds at this point.
I would be a little bit surprised. I joked like a year ago. I said Costco should issue stable coins that are backed on a 1-for-1 basis with the combo meal with the hot dog and drink. So
yeah,
but
yeah, that's free money. Bob says betting my life savings if they don't raise it.
Yeah, I think that they just bake that loss in, and it's a classic loss leader. So I'd be surprised, but there's risk. Jokes aside, it's nothing is free. So we're not saying bet your life savings on this.
Well, think about So in terms of betting your life savings, and because people are saying it's free money, like think about this, man. What are the chances that something happens to the Costco CEO and or he retires or whatever, and gets replaced by someone who's like, screw this, the hot dogs are getting, an increase in the price, like non-zero, right? So it could definitely happen.
Don, thank you for the donation. He says, thanks, Roy and Tevis, for the SoFi BM&R DDs and bootleg. Happy 2026, and hope you have a happy and successful 2026 too. Thank you very much.
Thank you so much, Don. I don't even know what SGD is.
I'm not sure.
Singapore dollars.
Oh, cool. That's awesome.
Okay. See, people are saying, "Oh, that would suck." But like, you can start to imagine a world where like it is feasible for the hot dogs to be increased. It's just unlikely, and that's what's being priced in right now.
Yeah, I mean, yeah, exactly. There's always uncertainty with anything, so you're going to find that in the predictions market. But it would be incredibly strange in my mind if they ever raised, or maybe a new CEO, higher probability, but not right now.
Yeah, I don't know. Yes, it is orange juice. It's actually like completely freshly squeezed, not out of a box, no sugar or anything added. It is amazing. I've had like 4 glasses today. It's we bought 10 kilos of oranges. Roy, guess how much 10 kilos, 20 pounds. Guess how much that cost?
$50.
$6. I was like
Almost
carrying them like this,
yeah.
like 10 kilos of like massive organic oranges, and I've just been making OJ all day. So it's been great.
All right, I'm pulling up. Oh, you had a bunch of
Yeah,
links that I couldn't get to.
I'm G Money. I'm looking younger and younger because it's Canada that ages the shit out of me, man. It's that country that just completely wears me down. Also, my job. I've been like off kind of for like the last 2 weeks, so it's been great. And that's
So
why you guys are seeing way more content out of me as well. It's like I'm putting out something every single day because I have the time now. Sorry, go ahead, Roy.
one of those links that you sent, I'm not finding it right now, had everybody's year-end prediction for 2026, 1 year out. Even the most bearish analysts were pretty bullish. And of course, the most bullish were looking close to 8,000 in the S&P 500. Do you think we're looking at another good year here?
I sure hope so, man. Like it depends, man, because it's going to be like a tale of two, stock classes, right? Like, what is the Mag 7 going to do versus what is the rest of the market, S&P 493 going to do? And I just don't know, because I think that you can very easily be misled to think the market is doing way better than it is if all you do is look at the actual Mag 7 companies. They're a flight to safety for so many people. And why do you have a flight to safety when you're uncertain about tough times ahead? And so I think like even in my portfolio today, everything was red except for Amazon and Meta, so I get it. I just don't think it's representative of the market being at 7,700 or 8,000 or whatever, because like 7 names or 6 names can single-handedly drag it up.
Yeah, that's certainly true. And like the craziest thing to me, Tevis, too, is what these are actually trading at. They're not crazy valuations. So if you look at, so I have just two charts going here. I removed Tesla just because it really skews this, and I actually need to bring this up past that one blip. I think we're here. Yeah, there we go. So we can see that the most expensive of these names is 33.1 PE, forward PE, and the cheapest is 22.68. And looking at, I don't have their peg ratios up here. We could pull those, but well, there's one that's growing very slowly. That's Apple. But everybody else, those are actually really respectable, if not insane, growth rates for mature companies. So, like, I'm actually kind of thinking, I don't know about this for sure, but it feels like this might be another 2023 where it's a very much a stock pickers market, and that large cap tech, especially these names here, just dominate the gains in the market, which wouldn't be the greatest thing in the world, but at least I have some ownership here. So, and you own actually a broader slate than I do. So,
Yeah, and I'm quite happy about it. I think like it's smoother sailing, man. It's they won't go up as much, but like if we're uncertain at least about the first half of 26, with the Fed chair and with the overturning of tariffs and whatnot, then I think I would rather have something that like falls 10% versus something that falls 60%. So thank you so much, two brothers. Really appreciate the kind words.
very nice.
Elijah says, max leverage Nebius. Yeah, man, it's my second largest position. I'm ready for it.
And
So
I'm interested in re-entering, so we'll see.
yeah, if Dems win midterm, your opinion, I think wouldn't it be split then? Because the president is Republican, and then if Dems win, what's
Yeah.
up? It's the House or the Senate?
The House, not the Senate, I don't believe.
So generally speaking, the market does really well in split governments. I don't know what the actual term for it is, but yeah, split governments, because nothing gets passed, dude. They propose all the things and then they get thrown down or they get vetoed by the president. But when you have like an overwhelming push on one side or another, that's when you have years that the market doesn't do as well because more change gets through, and the market doesn't like too much change because it's unexpected, and the market doesn't like anything that's unexpected.
Yeah. Gridlock.
Yeah. Perfect. Thank you, Kevin. So I think if Dems win, I would be perfectly happy with that, and I think the market would as well, quite frankly.
Yeah. Solar would probably do pretty well too.
Yeah.
Not in it, but just saying.
Do we have any other topics to cover before we jump into?
There was quite a few links that you sent over. I didn't see any singular topics that we missed necessarily. Though if there were any that you wanted to reach out to.
I saw, did you see Tesla in their end of year update? They said they had started production of Cybercab. I found that interesting.
That and then the 7 billion update to, or not 9 billion vehicles update. Yeah. But the Cybercab, seems like that they're serious on the Robotaxi push. So that's good.
I think that's going to be an increasing theme of 2026, man. With the Avride Uber partnership in Dallas and Waymo expanding into more jurisdictions and Tesla expanding so quickly after their summer launch, I think 26 is where you're actually going to see wide scale happening in autonomous self-driving.
Yeah, I related to that. It might be a little bit laughable because of our love-hate relationship with Joby. But eVTOLs might actually do pretty decently next year if it's a bull market. There's going to be a lot more visibility on them, and a lot of them are reaching critical milestone stages. And it looks like there's a lot of regulatory stuff that is going to be figured out in the near term, relatively soon. And then you have the Olympics, which is going to have a lot of eyeballs on it. There's official partners of the Olympics. These are going to be, catching a lot of cameras just because they look really cool. And I think there's an appetite for it. Like there's enough investment there that there's something they're seeing on the other side. So I'm not investing. I'm probably just going to stay on the sidelines. But I think Tanner might have been 1 year early. Is all I'm saying.
Yeah, I think there's a trend, man, because I was 1 year early with Unity, giving it to Tanner, and Tanner was maybe 1 year early with Jobster. Although Joby did pretty well. I got handed to the guy. I just didn't have the guts to buy it. But yeah, maybe we can do a poly market around will Joby have their first sale in 2026 or not, and then we can start talking.
Mm-hmm.
What else did we want to cover? So we covered the Intel stuff. We covered can we cover this real quick? How do I share this? Like this. Okay. I said first Tim Cook bought shares of Nike last week, and today the CEO bought $1 million worth of Nike stock, Roy. And I guess the question here is, has Nike finally bottomed, and is it time to buy? And or what do insiders know that we don't about the business going forward? Because, call it what you will, but it's some pretty strong signal when you're having multiple directors in addition to Tim Cook and also the CEO now buying shares of Nike. 1 million for the CEO is a pretty small sum, but still a good directionally aligned sign.
Yeah, Tim Cook or anybody else buying would be relatively meaningless to me. A CEO buying his own stock always gets my attention because there's only one reason to buy. You don't buy because you hate money. Buy because you like it and you want more. And you have a strong idea of what's going to happen in your company. So that's why the market likes it too. So that whole space, though, is just so tough. I don't know. I observed some trends that seemed counterintuitive last year, and I was wrong on Nike, but I'd never gotten into the stock, and I stayed away for a reason, just because I'm like, the competition is severe there. I did try to swing trade Lululemon. Didn't work out either. So once bitten, twice shy, I think.
Yeah, this is also somewhat of what I was thinking. So I don't know if you've ever played poker, but if you can raise, and it's a very weak raise because you're signaling weakness in the amount that you're betting, even though you're raising. And that's somewhat how I saw the CEO buying shares. It's he's buying shares. It's a good signal, but he's only buying $1 million. So is he doing it to artificially pump the stock or to signal a floor or whatever it might be, as opposed to, oh, he's buying like, Anthony Noda at $4, like he's buying $10 million. This guy is really freaking bullish. He's putting his entire like net worth on this. That is a much stronger signal. So it's like, how much is he putting down? And I think that could lead to speculation around the reasoning for why he's putting that much down.
Yeah. So are you interested in buying Nike?
Nah, not yet. Maybe if it goes, I don't know, man. I can't like simultaneously own Nebius and BMR and then just Nike. It's like I just can't. You know,
It's like me diversifying away from Palantir with PayPal. Yes.
yeah. So I'm sure maybe it's going to get to that price, and if it doesn't, I won't really have FOMO about it. Greg here says, doesn't seem like BMR and ETH are correlated anymore. ETH was green and BMR severely sold off. That might be true. However, many stocks severely sold off because of the time of the year, is my guess. Tax loss harvesting would still be in effect right now, although, I mean, ideally you would have gotten your losses out of the way earlier in the month so that you can buy them back at the start of January. But 30th, even tomorrow, 31st of December is the last day when you can do it and write off some losses. And BMR has not been a winner so far this year, right? It's down like 50% from its highs. And so as a result, a lot of people are taking their losses to write off on their taxes. So that could attribute to one of the reasons why you saw a discrepancy there. That also has impacts on the MNAV, right? Because if BMR is selling off and ETH is going up, then that's severely going to change what your MNAV is going to be, which makes it a more compelling buy to a lot of people.
Or less compelling to some. But no, it's over the long term, they're correlated strongly. Over short term, there's going to be fluctuations, and that's really where the opportunity, depending on the strategy of the digital asset treasury, comes into play. So, here, if this disconnect continues and it widens, they have $1 billion in cash, they have Bitcoin, they have 500 million, something like that, in orbs, which I care nothing about. At some point, they'll look to buy back their stock. I don't know, the estimates that I looked at today, they were at 0.9 MNAV. I don't know if that's enough for them to start buying stock back, or if they say, hey, we could actually see the disconnect that our peers are seeing at like 0.65. And if so, they might get greedy on the other side of that. But they can buy back a lot of stock, which would be accretive at that point too. So the strategy works both ways.
Did you just see the banner update Streamyard just gave us?
No.
That's so weird. They just threw up a banner right now on my, like, as I'm live streaming. And they were like, hey, we've sold to a parent company starting Jan 1st. The parent company is taking over. There's no change in your service, nothing, no extra. I'm like, I'm in the middle of a freaking stream. Send me an email. Like, what the hell?
Yeah.
Just zero.
Yeah, nothing on this side.
Okay.
That's so funny. Well, I hope it's somebody that actually gives what we actually want as streamers.
Yeah, instead of just raising prices.
Yeah.
But okay, we have a lot of questions to get to, and I'm very excited to get to them. Guys, ask your questions because this is the last Bootleg Weekly of 2025. So go ahead and ask your questions, and we'll do our best to get through all of them. But we're going to start now, if that's okay with Roy.
Yeah, let's do it.
What are your thoughts about Tanner's BMR rant video? Tanner got like 70K views on his last video on BMR, and I think he's killing it, and I'm very proud of him. And in terms of watching the actual video, I think he has a point around the size of the purchases on a weekly basis falling generally means that they think that ETH is going to go lower. So that's like the thesis in a nutshell. I don't want to go too deep, so I don't want to give away this video, but yeah, like when BMR is buying 100K plus Ethereum per week, then Tom DeMark and advisors are telling them pretty much that, like, hey, this is the local bottom. And this week they bought about 40,000. And so probably he thinks it's going to go lower next week and he can get it cheaper.
Yeah, and that was kind of what I saw as a signal when they increased the amount of cash. They always had some cash, and they were careful to do that. But when they reached the billion mark, and they seem to have wanting to maintain that exact mark, that's for a reason, and that gives them a lot of flexibility. So, I think that that's pretty clear. And so far, they've kind of been right directionally on the Ethereum, having further downside. So, but that will influence the direction of where BM&R goes ultimately.
Yeah. I freaking love everybody here asking so many questions because we got through one question, we added like 9 more.
All right.
But would appreciate any input on SOFX price action today. My understanding here, Roy, is that SOFX was down drastically while SoFi was up. And of course, SOFX is the levered ETF on SoFi. So why would that happen to your knowledge?
The one thing I saw was, since it's a dividend thing, that it would, but I don't see it is a dividend. Okay. That is a result of that payout. But usually that wouldn't happen unless you're decoupled from what you're supposed to trade against. So I don't understand why it did that.
So SoFi was up in the morning, and then, as with most companies, it faded throughout the day.
Yeah, let me
And
see if
funny
I can
enough,
pull
yeah,
both
go ahead.
up. I'll see if I can pull both up just to show it.
Sure. And I want to bring up another similar related post in just a second, but we'll let Roy bring up his comparison first.
Okay. And yeah. So that's how they traded today. Usually in something that is double leverage, you'll see it do around a 2x of what the other is, either direction. Of course, there's a decay there, but yeah, this is, unusual.
So Redbot, Bluebot, Twister says the NAV can slip on leveraged ETFs when stocks trade sideways if the intrinsic value drops.
Oh,
So
is that the kind of play that this is? Is it's like a yield max type of play?
I'm not sure
That
what
might.
S. I thought it was the
So,
2x leveraged.
well, yeah. So there are some that label themselves as a form of leverage play that are not actual leverage play, but instead what they're trying to do is like the yield max strategy of you're selling weekly or bi-monthly or monthly options, whatever it is, and you're using that to give shareholder return in regular increments, like every week, every month, or what have you. And so that's sometimes those are named this because they are kind of a form of leverage, but they're a bit of a misnomer. So I've not looked at SOFX. I don't know if it's a true 2x. People are saying it's a true 2FX, 2x. So
Yeah, the DTC C received a no action letter. I covered this in one of the BMR videos. They want to tokenize everything basically by mid 2026. So that's about 2 videos ago. But there's a clickbaity title that basically gives that away. So you can go back and you can check that out. They have a full demonstration on what they want to do and how they want to implement it. So definitely go check that out when you get a chance. Okay, cool. So let's wrap up with the SOFX question. What are we tax loss harvesting? Do you want to go first, or?
I already did tax loss harvest some PayPal leaps, which had really underperformed terribly. So all of those that were in my non-tax advantaged account, I got rid of. The only other options I have, just a few in my Roth. So I'll probably let those rot, but there are conditions that'll cause me to sell more PayPal.
Yeah, I tax loss harvested Next as well as my Duolingo. So I'm out of both of those names completely. And I'm not bearish on either of those names, quite frankly. I just wanted to reallocate the capital into something that I was more bullish on in 2026 because I, unlike popular belief, am not made out of money and I have to make some tough decisions. And I had the buffer to tax loss harvest them because I also locked in a tremendous amount of wheeling profit throughout the year, and so this helps balance it out a little bit for me. So those are the two main names that I tax loss harvested. Yeah. Greg, sorry, go ahead.
I just found out the company that's acquiring Streamyard is Bending Spoons from Italy, and they're looking at IPOing next year. So,
wow, that's some alpha for you. That's would you buy that?
I know nothing about them other than they're acquiring Streamyard.
Would you buy? Would you like? Let's say Streamyard was to IPO. Would you buy it?
Probably not. I might use a product. I mean, they aren't really innovating the way most people are, and they are giving they do a few things right. Like one is this that we're doing right now, multi-host streaming. There's a different term for it, but this it does best. Everything else it probably doesn't do best at all, and in some cases it probably does worst. And the price is also not right. It's not good. It's egregious. Every time I see that payment, I'm like, man, why don't I just switch? And it's because of this right here, which somebody will be able to figure out within this next year. So, no.
That's fair. Guys, you're asking a lot of questions, and I appreciate it. And I'm going to tackle them chronologically.
Rapid fire.
So, I mean, yeah. But what to do on BMR? I mean, do whatever you want to do, Greg. But what are we going to do is I'm going to continue to hold. I'm not adding to my position right now, even though it's like very tempting to do so. I think if it falls to like stupid levels, like low $20 range, then I would probably be adding more. But right now it's like I'm over exposed to BMR. What would I do when it pumps, or if it pumps to the mid 40s range, is I would cut my position so that I can reallocate some of that cash into other things, and cut BMR down to be about 5% of my portfolio. It's currently about 10%. So that's what I would do.
Yeah, I'm just holding what I have. I might add. I think I have like in one of my accounts like an uneven share count, and I always like to round that out. But other than that, I'm pretty happy with the size of my position. So that's for selling the options, which I'm being a little bit more careful of, just because I'm at this point the premiums are not enough, mostly just given the upside risk. So.
Do you think it makes sense for Meta to buy out Nebius to have their own cloud platform? Yes. I think the hyperscalers are using their own cloud platforms, and they're using Nebius more for their data center capacity. So I don't think like anybody is really putting a lot of value on Nebius's cloud platform. I don't think Meta is gonna make an offer or anything like that. So while it makes sense, I think it's like incredibly unlikely to happen. And I think it's near zero for Meta to make the offer and Nebius to actually accept the offer, because we know the CEO's ambitions to grow this thing much larger, and there's large validation from the market that they can do that. Now, what I do think will happen, which was in my predictions video for Nebius, which I posted a couple of days ago, was I think Meta is going to increase the size of their $3 billion deal with Nebius, because the reason it was $3 billion in the first place was as a result of capacity issues. So Nebius could not fulfill the demand that Meta had. If Nebius can expand Finland, or service it out of another data center, one of them in the US that they're building, for example, then I absolutely think you're going to get a press release sometime in 2026 where Meta is going to look closer to like 10 billion as opposed to 3 billion.
What if Amazon buys out Nebius?
Answer's the same. I don't think Nebius is going to sell. I do think so. One of my predictions was that they're going to get an offer for a buyout. I think that they would get an offer around 50 billion, 40, 50 billion. And I don't think they're going to take it. But I think it's going to be good validation, because it would make sense, man, for Nebius to have like the Missouri data center to be their first wholly owned US data center. It establishes a real foothold for them. And then the call option you essentially get on the subsidiary companies. I think it would make sense for a big hyperscaler to make a move on Nebius, especially considering the capacity concerns that they have in being able to scale the demand that they have. So I think I was thinking Google, but yeah, Google or Amazon is really who I think is more likely. I mean, the crazy predict. I don't know if you saw the video or not, but the crazy prediction that I made was like, Nebius is going to announce Missouri by the end of January, beginning of February, and the press release is going to read Nebius partnership with Google for however many, whatever the $1 billion amount it corresponds to. The reason why is because Missouri is an 800 megawatt like campus that they're building out. And we know that it's massive, and we know that they have a client on the other side of it. It could be an existing client, but my guess is it's going to be Google. And I think they're going to announce Google, and I think that it's going to be a massive deal, similar to the Microsoft deal in magnitude, and that's going to pump the stock end of January or beginning of February. Now, that's a really risky prediction to make because there's a lot of variables there, but if it happens, I told you so. And if it doesn't happen, this is just a prediction.
There you go.
Okay, hold on. Let me just bookmark a couple other questions here. Charles says, Meta buying Nebius would be massive, even in telecom. Being a Canadian, do you see Telespell or Rogers? No, man. No, they're so old in how they think. And all the Canadian telecoms, or quite frankly, telecoms in general, think about is like, how do we gradually increase prices and just churn a little bit more like pennies of profit out of this? They're not really thinking about like, what are the big bets that we want to make that won't pay off in several years. Especially the Canadian companies. I mean, we can make an argument for some of the US telco companies. So I don't think like buying Nebius is even on their radar at all. Buying any company like Nebius is on their radar at all. And yeah. Okay, hold on. Let's see. Roy, why don't we give up on PayPal, dude?
Maybe in February.
Okay.
Yeah, they have their quarter four earnings. They've already downplayed quarter four earnings, which I didn't appreciate. I do appreciate honesty, but yeah, they reiterated like so many times weakness, and some of it's macro and some of it's just frankly not. And things are taking longer than expected. Classic PayPal. Things have improved a lot. There's a lot of improvement, but the bottom line is it's not driving shareholder value. They come out in quarter four beating expectations because they will, but they come out guiding very tepidly and cautiously, and they say a lot of, well, macroeconomic this and transition year that. Then I might just be done if I hear the word transition year. And if it just, macroeconomic and weakness and we're in the mix shift of whatever, I might trim in that scenario. If they say nothing on advertising, I'm going to be very annoyed too. Like literally, there's this great update. I've talked to you, Tevis, about advertising and PayPal a number of times. Dr. Mark Gaither, just as a recap, the guy that built Uber's advertising business, which colossal success.
Amazon's.
Uber and Amazon as well.
Oh, okay.
Dr. Mark Gaither. So yeah, initially his company was acquired by Amazon. He landed the first partnership and agreement there for Amazon advertising. It was instrumental in building that from scratch. It's the retail media empire. Like it's gold nugget. Then he built Uber from scratch in like record time. People were doubting and saying, well, it doesn't prove intent, this and that and the other. But they were well positioned and they ran with it quickly. He's now been with PayPal since I think it's early or mid 2024. So we're not quite at 2 years. 2 years is about when he started hitting a stride there at Uber. I think it's going to take longer at PayPal, but like he'll do these interviews that get seen by 800 people. That's it. And unlike everything else at PayPal that is taking longer than expected, that is worse than expected, that just is not as good, advertising is all the opposite. It's things are happening faster than they said that they would do, bigger partnerships than they expected, and like he issued this point on Venmo. He said in October where they monetize on platform ads as well, and he said that the space was completely sold out for the month of October already. Like they've just been doing this for I think 3 months. That's pretty good. And Venmo is accelerating rapidly too, especially next year and through PayPal World. So it's like, why do they keep burying the lead and just like, hey, what's actually working extremely well and is a layup under with what PayPal has already in house and with bringing in Dr. Mark Gaither? Why do they not talk about that at all? It's like, oh my goodness, guys. So yeah, more of that. See ya.
So, okay, just very quick housekeeping. I currently have 45 questions bookmarked. We are now officially closing the queue. All further questions will. I'll do one more 46 since Steve just asked while I was saying this. There's not going to be any more questions unless they're like donation questions because we just can't do. We're going to be all night, guys. There's 46 to go. Okay, so sorry, no more questions tonight. But if you want to throw a donation, we can do that to make an exception. I want to jump to this one. Is like these are valid concerns. You've been a shareholder, very loyal, more loyal than most, I would say. Would you be open to another Alex Chris interview to sort of talk through these things?
Of course. I will say, because I've dealt with IR from a number of companies. PayPal's is not as functional as some other companies. So if you guys are listening, honest opinion of you, I'm sorry. There's been a number of interviews that, not just for myself, but for another that I know of as well, that were promised and not delivered on. And then communication fell through, and that's a problem.
So have you reached out? Are you going to reach out? Like, is that what's the thought process?
I might be done reaching out. It's one of those things where, if you keep asking a girl out on a second date and they ghost you for long enough, you're like, all right. And I've not done that with Alex directly. This is not on him. Yeah.
How about if I clip this and I send it and tag Alex and I'm saying, this is one of your loyal shareholders. You should really start answering the call when these things happen. Because
I wouldn't do that. I wouldn't go that far, but yeah,
I might be that friend who's like, you're an idiot for not talking to my guy. So I've done that before. I'll do it for you. Osiris is sending Alex a couple of emails on your behalf. So let's make it happen for our boy Roy. All right. What is a good level to enter VRT? I have no idea what this is.
It's Vertiv. It's one that has been talked about entering the S&P 500, and it probably should already be in, frankly. They deal with the AI. I believe, double check me on this, Chad, that they're in the cooling technology aspect as it relates to these data centers primarily. One thing that I'm just beginning to read up on is a lot of the data centers are kind of shifting, actually quite a few different things, but one of those is like their power system. So AD/VDC is one of those things that it's a big shift that I do not fully understand everything. I'm just beginning to dabble my toe in there. But one of the ramifications is there's a lot of efficiency gains, and some of it relates to electrical costs on the front end, but a lot of it relates to heat output as well. It's more efficient, therefore you're losing a lot less to heat energy, and then you don't have to deal with the cooling as much on the other end. So if that's what I don't understand is how fast this shift is going to take place, if there's going to be retrofitting, if this is just like future build out. But NVIDIA's already made this switch back in like April or May, I believe, and many others are following through as well with this capacity. So, yeah, this is a Q&A, so I'll leave it there.
Perfect. Glad you know the company because I definitely don't. What are we doing with our BMR bags? Sell now and tax harvest or hold through Q1 2026? Your feedback is appreciated, Senor Tevis. Look, I think it really is a case by case basis around what does the rest of your portfolio look like? What is your allocation concentration in BMNR? And if you have a ton of gains that you want to offset by selling BMNR, then go ahead and do that. Just know that you're going to have to wait 30 days to avoid that wash sale rule. But I think that's perfectly normal. I do also think that BMNR is going to start picking back up in 2026 as a result of all the tax loss harvesting that's going on. And if ETH goes up, then BMNR is also going to go up. So that's the thing that I sort of rest assured in, is I think that regardless of the noise, regardless of the price action, I know it's been brutal. I'm holding a bag too. Don't get me wrong, guys. What I rest in is the idea that ETH is going to have more network activity. It's going to have a lot more adoption, and it's going to have a lot more accumulation from institutions in 26 than it's had in 25. How do I know this? Well, I'm just looking at the trend and I'm extrapolating outwards. And if, in fact, all of these things do happen, when you mix it with staking and with institutions and ETFs also staking now, that's going to lock up a lot of Ethereum. And as that does, the price theoretically should be going up. I know it hasn't so far, but we've known Ethereum to have some pretty violent moves in the past. I wouldn't be surprised if that happens again. And so the last thing I'll say on that is it takes a relatively short period of time for sentiment to drastically change. You could be absolutely in the dumps around BMNR at 27, and you could wake up 2 weeks later and it could be at 67, and everybody loves it and everybody thinks they're a genius for holding it through and buying it in the 20s. Could happen. It could also be at 20 next month. I don't think it will be, but I think it could be. But I think at this point, the reward outweighs the risk personally. But again, your portfolio, it depends what the rest of it looks like. And I wouldn't be against anybody. Tax loss harvesting, BMNR, hell, I think it's a great idea even for me to do, but I'm not right now.
I think I mostly agree with you. The one thing that I'll say, and I probably should have made this point in my video that I did on BMNR today too, this is probably the riskiest it's been to buy BMNR, despite the price. And I usually think, oh, price is lower, same company, it's great. And usually that's the case. Here it's trading when it's like close to MNAV, like nobody knows exactly what it is, it's estimate. When it's trading at 0.9 estimates, we not so recently, but recently enough had, the update from the 10Q. We have a pretty good idea that, yeah, it's trading under MNAV. What we don't know is what BMNR will do. Will they continue to buy Ethereum? In which case they're eating into that cash hoard. Are they selling Bitcoin? Are they selling orbs? Are they going to instead use their 1 billion in cash and buy back shares? So yes, and that's true as well. Make sure you do your own due diligence. And that's why it's really important with plays like this too, is I've seen this so many times, Travis, like, okay, Palantir, real quick on this. Palantir, when it did its DPO, ran up to 45 really quickly from $10 a share. I wasn't in it at the time. I got in at the 20s. And then we had the bear market. So Palantir fell from the 20s all the way down to under $6 a share. And people that did their due diligence in the company and kept up to date with it, they're like, okay, the stock is heading into doldrums, but the actual company is killing it. And then when the OpenAI moment happened, they could know, oh man, I do not have enough Palantir. And it was very clear, like very, very, very clear. Wish I banged my hand on the table louder then. But to the point where I was 90% Palantir in my portfolio. But somebody could have followed, a lot of the creators originally in Palantir at $10 DPO, and it felt so good going up to 45. But when it trades back at $10 and under a share and you've lost money on it, if you had done no due diligence, you're probably saying, oh man, I was scammed. This company is stupid. There's no real product here. It was all rigged. The market's rigged against me. And then you sell at a loss. Even though you bought the right company, you bought it at the right time at DPO, you just sold because you did not do your own conviction. So it's so important you make sure you do that. Also, companies change over time, and we're only two sets of dudes. And so as a result, there are things that we miss that you will see. That's your alpha.
We're two sets of dudes. We're one set of dudes.
One set of dudes. Yes.
This is like the semi and the buy conversation. Guys, please correct me if I'm wrong, but semi-weekly means twice a week and bi-weekly means once every 2 weeks, right? Like this is because Roy thinks it's the other way around, and I'm pretty sure semi-weekly is twice a week and bi-weekly is once every 2 weeks.
Yeah, I think it's the opposite.
You're trying to name one set of dudes.
Yeah, but I mean like semi-annually. Semi means half, so there you go. Yeah. It's every 6 months. So
yeah, semi means half, Roy. So semi-weekly, as in half of the week.
I don't know. Like every environment that I've been in says it the opposite for whatever reason. Like, pay is a little bit different. You're paid bi-weekly, which is weird. Yeah,
every other week. So bi-weekly equals semi-monthly.
Yeah.
Yeah, the way I explain it to these guys is definitely not PC. I mean, it's not bad. I said semi as in semicircle, as in half a circle, bi as in like bi, you like both genders, as in two instead of one. It's not like two circles and half a gender, like it kind of makes sense. Anyways.
We may need to rename this podcast Set of Dudes Podcast.
Set of dudes. Too funny. All right, head in the game, bro. 43 questions to go.
Rapid fire. Yep.
How much money is enough money for you guys to retire completely if you want to retire and live comfortably?
$5 million or so. Rule of 4% is a pretty good rule. If you're not familiar, be sure to look it up. But it's basically living off of gains, assuming you inflation-proof whatever fund you have, to the tune of about 4%. There are some that have estimated as high as 7%, but that will depreciate. That will cause your investment to actually decrease over time. So yeah, rule of 4%.
I think you mean you're leering so much, Mr. P. Flast. And yeah, we have a lot to get through. And 5% or 5 million, I would say is also my number, because I think that, well, not only the 4% I think is super safe, but I think you can easily make over 4% with relatively low risk at 5 million.
Yeah. Yeah, my thing is when I actually get that, and I do not have that, by the way.
Nor are we almost there, by the way, either. Like,
yeah.
Go ahead, Roy. Sorry.
But I love what I'm doing, and if I didn't have to do it for money, I would still do it. So, but yeah.
Yeah, you could make 4.8% for 30 years with treasuries. You could.
Yeah, there you go.
Okay, Michael asks, I followed Tom Lee for a long time. His predictions about Ethereum and BMR may be right in the long run, but his timing has been way off. Long term, will BMR go up as he predicts? Long term, will Ethereum go up as he predicts? Because that's going to be a pretty good indication of whether BMR will as well. I would rather somebody be directionally correct and wrong on the time. Depends on how wrong they are on time, I guess. But then the other way around. Right? Like they're right on the time, but it goes in the complete wrong direction. So I think, that's where I would go with that.
Yeah, agreed.
Mm-hmm. What is the plan, guys? Sell off tomorrow and buy late March, April?
I thought that whether we got a Santa rally or not, that we'd probably have a early year sell-off. Not too uncommon after a very, very strong year for the opposite reason of tax loss harvesting. Not always the case, but even if we did, we're in a mid-year cycle. So prior to midterms actually occurring, the market tends to be a little bit more weak and vulnerable. It's sensing some weakness entering in. So I wouldn't be surprised if we have maybe not a big sell-off, but not the most exciting market for the first quarter. Could be very wrong, and that's fine. I still think it's going to be a solid year.
Yeah, I think the same. I think it's going to be a good year. I'm not selling off tomorrow. The tax loss harvesting that I wanted to do, I've already done. And in fact, I'm buying more. Like I put on the NVIDIA trade. Oh, I didn't talk about that. I put on the NVIDIA trade this week. And so Roy, let me see if I can bring up the NVIDIA trade for you. And I want to get your thoughts on this, whether you think this is going to be profitable for me or not. And did you see this, by the way, or no?
I did not. No.
Okay. We will interrupt your questions for a brief moment while I talk about my degen ways. I sold a pair of NVIDIA $200 puts for March, as in two, Roy. I sold two of them. And
They're not semi 200.
yeah, I sold a set of $200 puts for March. So I'm basically here. What I'm saying is I'm getting paid up front about 10% or so, and I'm saying that NVIDIA is going to be above $200 in March. And if not, then I have to buy it at $200 minus the $21 that I got paid. So about $178 is my cost basis, which is my average price. I'm going to be sitting at a paper loss because it's going to be at 200 and it's going to be trading at whatever amount under 200. But my break even is 178. If it's above 200, I keep that premium. Nothing happens. Roy, what do you think?
My only question for you before I answer is, do you want to own NVIDIA?
Absolutely.
Then yes, it's a great buy.
Yeah.
If you were like, no, I'm just doing it for the premiums, man, it'd be terrible. Even though it's the same price point either way, because the nice thing is like we don't know what's going to happen in the market. We could have a great plummet. You know, we're trading 10% lower than we are in the market. NVIDIA is like 30% lower as a result. And so then that buy looks stupid and idiotic. But I bet over the next 5 years it won't. So, that's a wonderful thing about cash secured puts on names that you would love to own at set prices. Now, there are times when the market bites you with a little extra piece of information, the stock plummets. But if you're like, I was going to buy there anyway, like,
well, the reason I went, so the thought process behind this was because I was going to do 200s for February, but February was just a couple of days before the estimated earnings when the expiration date was. And so I said, okay, I might as well give myself a couple of weeks to maneuver after earnings. If the earnings are good, I actually dragged up my price to 200 from 195 or 190 because I didn't want to have FOMO if this thing popped to like 220 or something. And I'm like, damn it, like I want to be in it anyways. And this thing popped. And so I dragged it up to 200 because I mean, the break even is like a couple of dollars difference and you expose yourself to more gains. And then I dragged it out to March so as to give myself like 3 weeks after earnings to maneuver, because if it tanks on earnings, then I want to be able to like roll that down or maybe take ownership and whatever, like maneuver it. So I definitely want to own it. I think that's a good starting, position that I want to have in it. Definitely nothing like crazy, but I'm happy with that trade.
Yeah, I like it.
Okay. Ooh, some good questions here, guys, that I cannot bookmark. I'm sorry, because we have 39 more to go. Michael Anthony, how low will HIMS go? That is Novo, new pill, hurting HIMS. That should have support by a chart, but markets could get worse with Fed minutes today.
I think honestly, it's not Nova that's hurting HIMS. I think it's HIMS that's hurting HIMS. There's been some internal mismanagement on comments released shortly before insider selling, which is really bad. Some poor comments around acquisitions, around potential partnerships at Novo Nordisk as well. Some key information, I wouldn't say withheld, but not disclosed in the prior earnings. Those are all yellow flags. They're not red flags. I'm not selling my HIMS. So yeah, HIMS trading at 30, just under 33 today. It could go quite a bit lower.
So in fact, the chart from a technical perspective has their support at about $22. If you guys see $22, that's where it's had support, $22, $23. That's where it's had support all throughout 2025. but it actually broke the pattern. So it could be a straight magnet to the low 20s. I just want you guys to know that so that you're aware. For me, the price can go to $2 and I wouldn't really sell out unless something fundamentally changes that I lose confidence that the company can execute. Similarly, it can go to $60 and the same thing. For me, like I said in previous podcasts, the main indication is going to be the next earnings. The next earnings is like my final straw around, okay, what do I want to, like, how much rope do I want to give this company to essentially climb out of the hole that they've dug themselves in? Yeah, so I answered this throughout. How does Tevis sleep at night with these large positions? I don't know, man. Like, I think at the end of the day, it's just percentages. Like, I remember I would get so freaking happy or so depressed when I won $500 or lost $500 when my portfolio was like $5,000. And at the end of the day, it's just percentages. Like, I know that I'm 31. I'm not going to be retiring anytime soon. And if I blow up my account, God forbid, but if I blow up my account, I will have plenty of opportunities to rebuild better by the time I do retire. So that's how I sleep easy at night, is that I know that I'm taking risks that are appropriate for my portfolio with my time horizon, with my risk tolerance. And I'm not doing something like I've done stupid things. I'm like, oh man, I shouldn't have done that. But I'm doing them less and less as time goes on. And I'm just like learning more and more. So um, they might seem like crazy risks for you guys, but that's just because we might have a different time horizon, or a different risk tolerance, or a different portfolio size, or whatever the case may be, anything in between.
Yeah, I think it's also important to decouple the money that you've invested, especially for the long term, from the money that's in your checking or savings account. Because if you stick with investing and trading and you figure out what works well for you, and you have time on your side, eventually what happens on a day to day basis in your account is more than you make in a month, sometimes more than you make in a year. And that can be, you get to the point where you're like, well, then why am I even doing anything but this? And
Yeah.
that can be pretty dangerous. A lot of people have blown up a lot of things that way. But instead, if you're able to decouple it, or your checking savings is what you're living on, this is a game that you're playing right now that one day in the future, it'll have real world ramifications. But right now, it's just paper trading, something like that, whatever it takes to divert yourself from the reality of, on a given day, you've lost 3 months worth of your income. Why show up at your stupid job? What does it matter? That's dangerous.
It is dangerous. Ray C says, let's blow up your account and start a 0 to 5 mil challenge, semi-degen weekly,
Yeah.
which has a very different meaning if you had buy degen weekly. But yeah, semi-degen weekly, I think, works. And no dependence. I think Mary hit the nail on the head. Like, I can afford to lose. Like, I'm not going to have a family that's going to starve if I YOLO some options into BMR and it goes to zero. It is what it is. It sucks, but it's at the end of the day, like, it all aggregates up to what are your wins, how big are they, and what are your losses and how big are they, right? And like, the fact of the matter is like, yeah, sure, I might put like 5K or something to that effect in BMR, and it, like, those call options go to zero, which is like, I have January call options for BMR and they're like down 95%, and that sucks. But I'm also selling against my holdings, and I'm also been holding SoFi for like 3 years, and I'm up like 3 or 4x on that. And
Yeah.
so, what I'm saying, like, they balance out at the end.
And for real, like, if you're doing, or anybody else here is doing something that's causing them to not sleep well at night, that's when you've taken on too much risk. And whatever that is, you need to make changes so that you can find that mental health that you need. That's more important than making a few extra bucks in the market. So
Very true. Astute, Roy. Astute. Um, Niners to the Super Bowl 5K bet. Don't tempt me. Don't tempt me. Uh, I haven't seen American football in like 2 weeks, and I'm like, I want to see it. Okay. Any Rocket Labs for us? No. Matt told me to buy like $4, and I'm an idiot, and I didn't do it. So
likewise.
yeah.
It is on the radar because it's one of those that in a down cycle, just gets killed by the market. So it was the second highest in my potential to buy list at one point, just because it fell to like 35.
Yeah, and I kind of want to pair this question with this question. Biggest regret at 25. I'd probably say like, not buying Rock Lab is definitely up there. I think one of the bigger regrets is sort of like getting married to a couple of positions, and not necessarily that I didn't diversify into other like high growth names, but that I did so late. And like I think Robinhood is one that comes to mind. It's like I just didn't I didn't look at Robinhood as objectively as I could have probably seen it, because I would have recognized the pattern way earlier. And I think it's because I was covering SoFi so closely that that sort of had an effect. So there's always stuff like that. I mean, I think there's definitely regrets around like shorter trades that I might have made that didn't go my way. Like, oh my gosh, I held a lot of like my HIMS position from 60 to 20 or whatever. But at the end of the day, like I did cut quite a bit of it in the 50s right after the last earnings. And I told you guys all about it whenever I did. So those are minor ones. But I think the biggest regrets are stuff that I didn't get in when it's like a total no brainer that I should have gotten in them.
Yeah.
Right?
Mine is PayPal.
Holding it for so long.
Yeah. Yeah.
That's very fair. Yeah, that's super fair. Besides from Joby, is there anything else in that eVTOL space that you would look at? Archer, for example.
It's been a while since I've looked specifically at that space. There's a bunch of little stocks that are traded there, so I don't know them all. But HOVR is the other one that looked pretty interesting. And there was one other name, I don't remember what it was, that was a little bit different. I think it might start with an R. But this was like 6 months ago, maybe a little bit longer. So yeah, do your DD. I couldn't. I really actually, when I looked, I think Joby's issue, real quick, is scaling is really hard when you're extremely vertically integrated, and they are. But if you can do it, then you actually create something beautiful and special. And I think their underlying technology is incredible. I don't know if they can scale or not. Maybe they can. They have the right partners. If I was forced to bet right now, it would actually, ironically, be Joby.
Huh? Do either of you own Bloom Energy? No, but I saw the Dumb Money Guy's thesis on it. I think it's interesting. I think there's also like a lot of things that can go wrong with that trade, so I'm not touching it. Tevis, do you prefer Nebius to secure more big contracts from hyperscalers or many small customers like Cursor, Black Forest Labs securing stickiness? I think at this point, I would rather have hyperscalers because it's better publicity for them. It adds a level of validation to the business where if they're working with, let's say, I don't know, 5 of the top 6 hyperscalers, then that's validity in the eyes of the market. Versus if they're working with Black Forest Labs, there's a very small percentage of people who actually know what Black Forest Labs are and do. And even though they might make more money, let's say by Black Forest Labs, I think I would still rather have them work with Google and Amazon next and secure sort of like the main hyperscalers, because that's just going to be great, for them. Right?
Yeah, no thoughts beyond that. Nebius, that speaks more. So,
I really want to add one more question to our pool, but I've said no to 15 questions so far. I won't. What's the deal with Orbs?
I think probably Tom Lee bought it as a favor to a friend, because Dan Ives became the president or chairman, whatever the term is for WorldCoin.
Yeah, I think they had news this week, right? Orbs did. Did they do a buyback or something?
Orbs, I don't know. I'm in less screen time mode for this week and next week, so
I think they did a buyback.
I've never liked it though. They announced a buyback program.
Yeah,
okay.
$125 million buyback program.
Yeah.
Does that change your opinion at all?
No.
Okay. All right. Next question. Isn't it because of the holidays? I don't know what this is in reference to. So Ryan, if you're still watching, then just let me know what that's in reference to, and we'll come back to that question for you. Ooh, 2026 stock draft is going to be interesting. Let's take a look at the 2025 one. Well, I don't know, because like we started it in June. So like, do we finish it in now, or do we just keep it going for 1 year?
We can wait, but yeah.
Do we want to talk about it or no?
I think probably not today. Maybe we can do next time.
Yeah, let's do it. Any ideas on the real estate market?
A lot of that's tied to that 30-year rate, and Fed's cutting is not enough to actually bring that rate down. So,
yeah, that's interesting. Okay, so you think SoFi's home loan segment is actually going to be worse than expected because the Fed rate won't be as big of a deal?
I think I've seen more expectation and more hope for this coming year than I have in the last few years. And I don't know if it's warranted to the degree that I've heard and I've seen. So I think that it won't be going backwards. Like it'll improve over 2025, but maybe not to the extent of what's expected. Yeah, the 30-year is not like the Fed fund rate has very very little weight on the actual 30-year, which is inferred by the 10-year Treasury yield.
Got it. Okay. Are y'all building cash or continuing to DCA? I know a lot of people think things will go down soon.
I bought a lot of stuff a week and a half ago, and yeah, closer to 2 weeks ago, and I've not bought since then, other than my DCA and Bitcoin. So I've been trying to acquire cash going into the year. I always like to have that just if I want to initiate a new position or round out some others and try to figure out what I want to pursue more aggressively. So.
Yeah, I've been adding a little bit of cash because in January is when the tax haven accounts reset, like the limits reset. And so I want to take advantage like Jan 1st, Jan 2nd of depositing like my trying to fill up my tax haven accounts as soon as possible in the year. So that's the reason why I'm accumulating cash right now. Just a little bit, not like crazy amount. Where does BMR get money to buy ETH? They dilute shares. So yeah, they issue more shares and they sell those shares and they get that money and they buy ETH. It's not great for shareholders at all. I know everybody is different, but can you talk about diversifying your portfolio too thin and too many positions to not miss out or balance your portfolio versus concentrated in 10 stocks? Yeah, so they actually did a study on this, Tommy Jerry, and basically what the study showed was anything above 20 stocks does not materially make a big impact in your portfolio, like beta, in the volatility of your portfolio. So if you want to diversify, like please go ahead and do that. But if you're holding like 60 positions, it's almost as volatile or lack thereof. It's almost as like stable as you holding 20 positions because it massively drops off a cliff over 20 positions in terms of the rate of diversification as a result of the lack of fluctuations. Now, from the, it's like a parabola, right? So it goes like super 1-to-1 and then it goes flat. For me, I generally like to stick with a portfolio sizing that corresponds to the amount of capital you have. If I have new family members, for example, that are starting out their portfolio and they have 5K or 10K, I always tell them like go into 2 names or 3 names. And yeah, don't go out of 3 names. Like don't diversify to more until you get to like 50 or 60K. And then you can have a 4th or a 5th until you get to 100K. And then you can have a little bit more if you want. But you want to be in, if you want to be in wealth accumulation mode, you need concentration. For my portfolio, I mean, I still have it to like 10 names, and that's pretty much it. And I'm perfectly happy with that. I think even to concentrate even further. But that's sort of where I fluctuate, anywhere between, I think the max was like 17 names and the lowest was like 8 names, and now I'm like at 10. So
Yeah, the only thing I'd add, and I completely agree, Tevis, is when you get so diversified, just for the sake of diversification, just pick an ETF you like. Save, they cost a little bit in terms of fees, but yeah, if you're making focus on earning money in that scenario, putting it into the ETF you like, let them work for you. That's it's not something that benefits Tevis and I, because we talk about individual stocks and stuff, but that could be the right thing for you.
yeah, I mean, there's also this other strategy of like something that Matt has talked about at length, which is that he puts a majority of his portfolio into like the SPY or the QQQ. And so he puts maybe like 60 or 70%. And then with the remaining 30%, he just takes 3 or 4 or 5 big bets. And he goes like, okay, whatever big amount is in Rocket Lab, in Palantir. I think those are a couple of his big bets: Rocket Lab, Palantir. I'm not sure what the other ones are. They're not coming to my mind right now. But he feels comfortable to be like, okay, I have a 100K Palantir position, just as an example. And if I lose that, that's fine, because 70 to 80% of the portfolio is in the QQQ or in the SPY. So that would also be like, oh, it's super diversified, but not really, because you only have like 3 or 4 positions. It's just one of those positions is an index.
Yeah.
Okay, great. Let's take a look here, Roy. So Ryan is not answering, so I'm dropping his question. I'm adding Two Brothers' question because I really want to talk about it. How much do you think Costco wieners will cost in 2026?
$1.50.
Next question. Way to waste a valuable slot. We have 25 left to go, guys. Are you guys questioning your career choice and thinking maybe you should have opened a daycare instead?
Well, this isn't our career for either of us, so we do this as a hobby and as a side gig. Yeah.
Yeah. How do you guys know? I could already be owning daycares in wherever it was, Minnesota.
Yeah. You could buy a few daycares. Yeah. Tevis is very successful in the field that he operates in. Very successful. And if you had questions on that, just look at the product that he has talked about, AlphaSense. And it's like, that's not right. Yeah, Alpha Ledger. Thank you. Can't remember the name. but honestly, it's a really good product, very slick, and something that definitely I'll likely be using. So, and he built it, as a side to what he's doing in addition to YouTube and also his career. So, talent.
It's going to be a lot of fun. It's going to launch in January. I'm very excited about it, and yeah, man, I'm just excited to get like external market feedback and see if we have some type of product market fit, because right now it's just like we've sort of been building in isolation, and it's going to be fun. So excited to share that soon. What are your thoughts on Bitcoin bottoming around September, October, aka crypto winter? I think the cycle is not going to hold. I think it's going to be off. And I know a lot of like people are thinking the same, is because we're seeing a divergence from the traditional cycles that we've had as a result of all these institutions and nation states to a large degree start to enter the game. And I think that's really going to sway things.
So do you think this functions then as a crypto winter? And we inverse?
Maybe. Yeah, I have no idea. I don't know. Like, I think the playbook for Bitcoin is being rewritten to some degree, and we might have a crypto winter. It might be milder, or it might be something completely unexpected that hasn't happened before. But it makes sense because you're playing at a different level of the game. You shouldn't be expecting like it's the same game, but it's completely different in terms of what you can expect in that different level. So. If Netflix does end up buying Warner Bros., man, I'm not going to answer this, but probably yes.
Hopefully we never find out.
See, this is the problem with like trying to talk and bookmark questions at the same time. Like, I don't get to read the questions as I'm bookmarking them. So I just trust you guys, and that's proven to be a mistake sometimes. How do you go about seeing certain stocks go up like a lot like Rocket Lab or Iron and not being in it, getting FOMO, thinking of starting Rocket Lab position, but stuff is high? Go ahead, Roy.
So I'm not a trader. If I was a trader, it'd probably be a completely different answer, and I wouldn't know how to answer that. But as a long-term investor, what I'm least excited about is short-term price performance in the stock. Indeed, there's been times when wrongly that's kept me away from establishing a position. The other is, I've had enough home runs in my time of individual investing that I know that if I continue to stick to what actually works for me, I'll be wrong sometimes as well, but a lot of times I'll be right and significantly so. So I'll have some of those gainers as well. I don't need to be in every play, and I can't be in every play.
Yeah. I think just making peace with the fact that you can't be in everything and you can't like who would have guessed that SanDisk was the number one? Like you just don't know, man. You know, but the idea around finding certain positions is trying to find an information arbitrage. What do I know that the market has not priced in yet? And how big or impactful is that thing? And by going through it from that perspective, I think you're going to find a lot more stuff that you might want to take a swing at. And remember, the rewards far outstrip, from a compounding perspective, what the losses are. The maximum you can lose is 100% of whatever you put in. The maximum you can win is infinite, theoretically infinite. So think of it from that perspective as well. It's like if you had a portfolio of $10,000 and you think you have information asymmetry in 10 positions, 9 of them could go to zero, but the 10th one will do a 50x and you'll still have way more money as a result of it. Did I follow through with the Piton gift? I feel really bad about that. I think maybe Tanner and I will talk. And see, the problem is like now that I sold off my Next and my Duolingo, there is no stock that I hold that Tanner does not also hold. Zero. So I don't know how to play this game anymore, Roy.
Well, maybe we just end the game.
Roy just was like, I don't give a shit, dude. Like, end the stream. I'm tired. 20 questions to go.
In the game, not in the stream. But no, I don't know. It would be easier if we could actually give gifts or receive gifts from different people every year, but random sure means that Steve likes to give to me. So
hey, I still haven't bought air test systems, and I'm going to do that in the first week of January in my tax haven accounts, and I'm going to be very happy about it.
Glad.
Is BMR a long-term hold for you, or are you looking to exit once a certain? So, like I said, I think I answered part of this, Mary. I'm looking to trim a good chunk of my position once a price target hits to allocate to other plays. But I think I'm going to keep a portion for the long term because I believe in that Ethereum ecosystem. What about you, Roy?
Yeah, it's been a 2-year play for me. So I long term I'll have to see. I probably will just choose to hold ETH, but I could be swayed.
Yeah, I think the holding ETH is also totally fair. I think the dilution is something that doesn't really sit easy with me, especially because like they have a lot of cash on their balance sheet and they're still diluting more and more shares every week. I'm like, dude, why?
So the main thing for me is like we don't know what they'll do once they hit that 5% figure. So if they continue to accumulate ETH, I'm fine with that. Up to probably wouldn't want like 9.99%, but if it's like 7%, 8%, fine, that's good. If they are diluting me though to buy more orbs, I will not like that. And I will not want to own Bitmine long term. And we honestly don't know what the plans for sure will look like once they've achieved that 5%.
Yeah. Nazu says, I can't wait to see the gift he has for me next year. Oh man, I'm not quite happy about it. Hey, Michelle, you're quite late, but appreciate you being here regardless. 19 questions to go, people. How many rate cuts do you think we're going to get in 2026, considering what the Fed minutes indicated? I didn't look at the Fed minutes, but I'm assuming they were bad because considering the market kind of sold off.
Let's pull up the rate cut probability because I want to see how that impacted it.
What are we thinking, like 3?
So 2 was the kind of consensus that was before, and I have it up here now. I have not looked yet. and here we are. It didn't shift around too much. So if we look at this, yeah, it's about where it was. Looks like a little bit higher probability than we were a week ago. Of course, less than a month ago for multiple cuts. But yeah, we're at 3.5 to 3.75. So 2 is still the consensus. 3 is next in line. That feels about right to me, between 2 and 3. I wonder if SoFi tends to guide pretty conservatively with the macro. I wonder if they'll just say, hey, yep, 2 sounds good, or if they'll be like, yeah, 1.5.
Well, I don't know about SoFi, but I think once we get a new Fed chair in, I think it's going to be closer to 3 and maybe even 4, but definitely 3.
Yeah. No, that's the other thing is 2 seats are up for grabs, essentially, assuming Powell does resign like he's usually does when there's a Fed president that's leaving. So that leaves 2 seats for Trump to fill, and they will probably be happy to cut rates.
Yeah. Okay, moving on. Goals for 2026.
My main one is to finish my PhD. So I've submitted my dissertation for the second to last stage. The second reader is going to come, and we'll finish up, polish some things, hopefully defend here in April or May. And it's been many years in coming. It's multiple moves since then. I had to take off a couple of semesters as well along the way, so it'll be good to have that behind me. Then I can focus on other goals, but that's like top of mind.
Yeah, I don't know, man. Like, have a positive, market return this year would be great. Pursue happiness, or try to work towards that. Other goals that I probably don't want to share on stream. Travel a whole bunch. Like, I don't know. It's just whatever other, like, go through life, get through the year. So let's start with that one and then move up from there. You guys see how Fundstrat used Tom Nash in a video today? What are they thinking? Not a good look. I didn't see this.
I think that's
but I will definitely look at it right after.
Yeah.
Yeah. Is Crossroads going to bring back eating fruits?
I'm not quite sure what that means, other than like popularizing eating fruits. But I will say, grapefruit right now in Texas, very nice.
Cool. Yeah. Also, Two Brothers, much love for the guy. He's asked like 4 questions. So if you guys want to hate on somebody, that's who you hate on. But probably not, because he also donated a bunch of money. So very grateful for you. Thank you very much. Christian K asks, Tevis and Roy, please shed a little bit more light on the BMR 50 billion dilution. Did you guys get to vote on this? I did not vote on it. I don't know, Roy, if you did.
I did not know.
Okay, let's answer this. What would we vote and why?
I would vote yes. 50 billion is eye-catching. I think 5 billion would have been more than fine. 10 billion maybe even. So there are some questions as far as why specifically. To date, well, that's what we can look at. What they've said that they will do in the future, and what they have done to date, all indicates that they're not going to be flippant with dilution, selling under MNAV to buy more Ethereum, which would not be accretive. So ultimately, like I think that this is a move just to get shareholder approval on this, so that if there's continued scrutiny on companies buying and acquiring and holding crypto on their balance sheet, which the New York Stock Exchange might be impacted by, but the NASDAQ certainly is looking at as well. This kind of future-proofs that.
I hear you. I would probably have voted no, simply because I don't love the idea of so much dilution, and I don't want to give them like carte blanche to dilute us into oblivion. I know that they wouldn't, or I hope that they wouldn't, but at the same time, it's just like, why would I want to open the floodgates for that? So for that reason, I would probably vote no, just to sort of keep them in check, that there is some cost and some repercussion to just issuing more shares. It's not just like, hey, it's a money tree that just keeps printing money. Are you guys on the VG train? Roy is. I'm not. Do y'all think Bitcoin, Ethereum, BMR recover? See, another Two Brothers question. This mofo is asking all the questions. I'm telling you guys, he's monopolizing all the questions.
This year, yes. Quarter one, I don't know.
I think yes. Yeah, I mean, I think Roy's answer is a safe one. This year, yes. Quarter one, I don't know. What are your thoughts on HIMS over the next 2 to 3 quarters? Do you see it recovering back into the $40 plus range?
I see it as probably a trading range bound, so opportunity cost, I guess, for the next few quarters. There is upside potential. Of course, there's some downside potential as well. HIMS has been, for the last 2 quarters, a second half of 2026 play for me.
Yeah, I think it really depends on, peptides is going to be one of the macro things that it depends on. Depends on management and what they guide for, and really what they're looking as the revenue drivers for 26 and what the next earnings is going to be. I think the growth rate of the testosterone and the menopause products are going to really dictate a lot of what we can expect of our confidence for them to be able to hit their guidance. And like I said, really, like, this next quarter for me is make or break, because I'm just there mentally with my sentiment. So I hope they recover. Absolutely. I hope I don't sell the bottom. I have been known to do that with several names, actually. But it really depends on this quarter, especially because the end of the year is coming up and they're going to be issuing full year 26 guidance. So we can build that into our models as well.
Yeah. And like the other thing, like as far as the timing of stuff, what I'm looking at is the year-over-year comps versus the 503A exception for the shortage list that they're able to do with the GLP-1 solution versus when they didn't have that huge sugar rush, plus the timing of like the estrogen and testosterone products. I think that those are meaningful adds. And so the year-to-year comps will become a lot easier at that point, and we should see growth in those segments by that point as well, showing us this is more than a weight loss strategy.
Yeah, absolutely. I start to see a recurring theme here. I mean, like, do whatever you want, man. Like, if you're bullish on the company, buy more. If you're bearish on the company, sell it all. Like, we're not financial advisors. I think we've shared what we're going to do with our positions. We're both still holders, and it's still a hold status for us. It's not a buy or overweight or whatever the other categories are. It's like we're holding, we're seeing, and largely whether I'm holding KIMS this time next year or not depends on a lot of what the management says and what my confidence is that they can meet their guidance. That's it. Does Nebius have to raise more money by diluting shares? Do they have to? No. Will they? Probably yes. Why? Because they're going to try to grow faster. They already have several data center approvals pending and different sites in the US for data centers. And I think that's as a result of the previous raises that they've done in part. And I think that's going to continue. And quite frankly, as an investor, if they dilute you by a certain percentage to build another data center that they have contracted with a hyperscaler, let's say, and they're going to return the ROI multiples fold, you should be hoping for that dilution to happen, because it just allows them to accelerate their roadmap even further. So probably you're going to see another dilutive event in 2026 is my guess. Anything there, Roy?
I think that's likely. That's one of the reasons why you become a publicly traded company, is so that you can tap into equity easier. And that's by offering at the money, or there's many other vehicles as well. You have a lot of things that you can use. And it's dilutive if it's done for stupid things like buying private jets that have nothing to do with your business. It's a beautiful, amazing thing if you use it to acquire a company that becomes accretive to your business and it accelerates revenue much faster than just the sum of the parts. Or buying the next thing that's going to launch your business into outer space. That's not dilutive. That's constructive. And so really, that's why leadership is such an important part of my investing thesis. Is if I trust leadership and the vision that they and their ability to execute on that vision, then it's easy to be like, okay, they're diluting, but I trust what these guys are doing. They've earned that trust. They continue to earn that trust, and as a result, they earn my money. I'm going to hold through this, even though it's going to cause downside pressure on the stock, even if it's for the best of things. The question is not what the stock will do on that day, but what will it look like a year, 2 years, 5 years out.
Absolutely. There's 9 questions to go, and it's currently 2 a.m. my time, and I think Roy's also tired. So it's these 9 questions, and then we're done, guys. For 2025, we're done. So I appreciate all the extra questions that are coming in. I wish I could answer them all, but I would be here all day. I think HIMS needs to change its marketing program, target high school kids, college kids. Maybe. I mean, they've definitely been on the forefront from the marketing side, and I'm sure they're thinking about different demographics as well, especially as they expand into new categories. I'm not going to read the last part of that. Does HIMS even make money? CEO shenanigans have kept me away from buying.
They make money, yeah.
Yeah, and they're profitable too. So there's also that. Do I sleep with socks on? No, I don't. Roy, do you?
No.
Okay, good. Your expression. Oh man, we're both tired. Do y'all think there's more bullish? Go ahead.
I was going to read it for you. Do y'all think that there's more bullishness in the market before the bear hits next year? I don't think the bear market hits next year. Maybe 2029 at earliest.
Yeah, I 2029.
I've been saying that since late 2023.
Wow, I will subscribe to that. I don't think it's going to happen in 26. I also think 29 is wild, but yeah, I'll take a bull market till 29 for sure.
So 29, it's due to the timing impact of the combined thrust of AI and robotics and what it does with unemployment. And when you have it's really like a second order effect. Not even the layoffs themselves aren't what could cause a severe enough macro event to hit and cause bear market status in the equities. But that seems to be lining up with where the technology is going. So we'll have to see. We're too far away at the robotics to say with like certainty, but yeah.
Cool. Yeah. So definitely not 26 is the thesis. And yeah, it's already New Year's Eve for me. So Steve's not the only one who's going to be streaming on New Year's. There you go. You guys heard it here first. Roy, what's for dinner tonight?
I made a homemade sourdough pizza crust, and so we had ham and pepperoni pizza, and then also a barbecue pizza.
What the heck? Multiple types of pizza. That is like heaven. I had stuffed peppers with ground beef. It's great.
That sounds great.
It's like a stew.
Yeah.
Have either of you done a deep dive on Grab? No.
I've not released one. I've done probably about 6 hours of DD on Grab, so I went deep enough where I felt like there's a lot I don't know about the company for sure because it is broad and diverse, but it felt like it was an okay opportunity, and I don't invest in those. And so far, it's performed like it, but yeah, they're like when I look into them, and I do, because I have Amit primarily that is well invested in that. I like to check up on my friends' stocks from time to time, and they seem like that they're performing quite well, but I still think it's just going to be okay.
Yeah, I don't own it. Don't intend on owning it. I don't know much about it, and have not done a deep dive on it. Who are some people or accounts you follow for Nebius updates?
I will throw the one up here.
Yeah, Manuel is probably what he's throwing up.
Yeah.
Yeah, so Manuel is great for Nebius. Obviously, myself. There's a couple of people on Nebius. There's Daniel. Daniel, what is his handle? Maybe hold on. Maybe I'll show you guys my Nebius list. So, yeah, Okay. Here's a list of creators on Nebius that I follow. Let me share my screen, and then I'll literally give you guys the list. Holy guacamole, Mary with $50. Thank you so much. Happy New Year, Mary. Hope 2026 is a terrific year for you. Really appreciate the donation, and yeah, thank you. Hope you have a great time. Let me share this list. So this is my list of Nebius creators. I continuously add more people to this list. So RJC, the co-founder of Nebius, Daniel, other Daniel, Alex from Babylon, Gen Z Investors, fantastic. Agrippa is more on iron, but he talks about Nebius as well. Baby Folio, Manuel, Neil, Sam, and other Daniel. There's a lot of Daniels in Nebius. So that's my current list, but I'm still, whenever I find new people, then I just add them to the list for whatever stock they're talking about. I am currently in an undisclosed European location, and I'll be back in Toronto by a week today, basically. We didn't answer this because we were not accepting any more questions at the time. Also, let's go. Last two questions, Roy. Will I become a full-time YouTuber in 2026? No, I am not making enough money, nearly enough money from YouTube to even consider that. I think ideally I would love to do that, but probably not 26, maybe 27 or 28, depending on how well we go. Because you got to keep in mind that the views on YouTube are very, very closely correlated with the market. And so if the market has a recession, your views are going to be in the gutter. And you don't want to quit your job. And then we have a recession, then your portfolio's in the gutter, and then your YouTube profession is in the gutter. Like, you're going to be under a bridge real quick.
And in a recession, advertising dollars are less. And so YouTube's makes less. So they give us less too.
Yeah. Yeah. Tanner, welcome. You are going to catch the last 5 minutes of the show, my man. Sorry, Roy, you were saying something?
No, I already said it. So, yeah.
Last question we have in the queue, and we made it through 45 questions, guys. What are your top 3 picks for 2026? Roy, I'll let you start.
Air test systems, which I gave to you, Tevis. I think they're lined up for a very, very strong second half, and maybe even have some premium before that. They report pretty early in January, so it's one to pay attention to, I think, now, especially in this price range. SoFi, not sure if you've heard of that one before, but they have a lot of catalysts that line up too in 2026. Some that are dependent on their execution, some that are just through the macro, and they're just positioned very well in that intersection between banking, cryptocurrency, and AI. So I think that they're going to perform very well. And if I was going to add a third one, I have a lot that I think that will perform solidly, but I think BMR, honestly, like for where it's trading right now. I think Ethereum, if we're doing the whole 2026, it may take a quarter or two, but I think that we'll be trading at a higher price.
Okay. Since Roy picked SoFi and BMR, I'll try to not pick those. I would say 3 big bets that I'm making in 2026 are, of course, Nebius, which I talk about all the time. That's a company that I'm very, very bullish on. The second one is Meta, which I've been buying more heavily, and especially after this acquisition, I think they're going to be a big winner in 2026. And it's going to be a catch-up trade. And then the third one is I placed a pretty sizable, actually, for the size of my portfolio, position on Amazon spreads. And it's the biggest option trade I've placed in my life so far. It's definitely not like Chris Patel levels by any stretch of the imagination, but it's sizable for me. And I think Amazon is going to have a good year in 2026. And for the sake of my portfolio, I hope that's true. But it's a pretty safe trade as I see it. So, Roy, do you want to know what it is?
What is it?
It's January 2028, not 2027, it's 2028 for Amazon. And I'm buying the 230s and I'm selling the 280s, and then max profit at 280. So if Amazon hits 280 by 2028, you basically triple your money. Now, of course, it can go to zero because you're playing options. So definitely, hold on, where's my banner? This is not financial advice, you freaking degens out there. But Amazon, I think, only needs to move like $15, and then you like nearly double or something like this. Like there's zero movement priced into Amazon because it's not moved at all year, and so I just thought they were kind of mispriced, and I think they're going to do very well in 26. And I also own Amazon shares that I've been accumulating, but these spreads are definitely kind of aggressive, and I kind of love the trade. I want to buy more.
The main thing with spreads that far as the time is you're basically paying for theta. So even if there's a big move up or down in the stock, it doesn't change as much as you might think, just because the theta is so valuable. So like to exit it early is not going to be maybe as meaningful for you as a more aggressive trade. But yeah, if you're like, it's pretty conservative, and I think it's a good thing for you because you enjoy options and a little bit of upside there. So like the realistically, it's not. I would say the baseline case is you're looking at maybe a 1.5 to 2x in 2 years, and that's good. You take those.
Well, so the way I saw it is that I have 2 years worth of time to reach that level. But if we have like Amazon buys Nebius, whatever, and it's at 280 tomorrow, I would cut those tomorrow and take however much percent gain, like 50%, 100%, whatever. I don't need the full 3x. Even if I reach max profit and I have 2 years left on the clock, I would just take it early, and I would then go into Amazon shares as a result.
Yeah, it might just be a 30 or 40% gain in that scenario, but
even if it's a 40% gain, if it's a 40% gain in a month, like, thank you very much.
I mean, you still like, okay, good. Love to have this. Give me more of those problems.
It really depends, but I think Amazon's going to have a good year, and like I'm capping myself to the upside, but I'm capping myself to the upside at 3x my position. So I'm like, all right, I'll do it.
All right, and we need to wrap because Robinhood event is about to start in 1 minute.
Thank you, everybody, so much for watching Bootleg Weekly. Last one of 2025. This is not financial advice. I don't know why that's still up. Hope you guys have a terrific new year and a lovely 2026. We will see you in the new year. Roy has some travel coming up, and I'm going to obviously be traveling back to Canada. Love you all. I appreciate you all. Thank you all for supporting, and we will see you when we see you. Goodbye.
Later. Happy New Year.